Hey, good morning, everyone. Welcome to our training webinar today. I'm Ken Spencer. I'm the president and CEO for HR Service, and we're very happy you can join us to get some important legal updates. We have two presenters today, Liz Warren and Melanie Reamer, and Melanie is going to kick us off. So, Melanie, I'll turn it over to you.
Thanks so much, Ken. So the first thing we're going to start with today is avoiding penalties and a deep dive into late 5500 filings and how to use the DFVCP as relief. First, we're going to go over 5500 basics real quick. Then we'll get into some common reasons for late and missed filings, what the DFVCP is, how to file under it, what the penalties are, and best practices to avoid those penalties. So for 5500 welfare benefit plans, the whole purpose of it is to just give transparency to the DOL and the employees on the financial condition and operations of the benefit plan. There are several parts that are included, like basic plan information, financial information, and the schedules. And each section must be completed as accurately as possible to comply with the DOL requirements. So what needs to be reported on the 5500s? It's anything that's covered under ERISA. So that's your health, dental, vision, and short-term EAPs, things like that. Some other things to consider are HRAs. These are ERISA covered and usually are required on the 5500 filings. Now, FSAs, if these are just fully employee funded, they don't need to be filed. However, if the employer contributes to the FSA and has discretionary control, it should be filed. Now, HSAs, these aren't subject to ERISA, so they are exempt from 5500 filings for welfare benefit plans. Who needs to file? It's anyone that offers welfare benefit plans, has 100 or more participants at the start of the plan year, or has a funded plan. So funded plans, those are the ones that are paid from a trust. They need to have direct compensation of at least $5,000 and it must be filed regardless of the participation counts. And these Form 5500s will include Schedule A's for those funded plans. Now, unfunded plans, level plans, or combination of both, these are ones that use insurance carriers or pay from general assets. These require a participation count of 100 or more participants at the start of the plan year. So let's say at the start of your plan year, you have 90 participants, and then mid-year, you go over that 100 mark. You are still exempt from filing for that year because they're looking at the start of the plan year. And your participation count should not include dependents. And anything that is through insurance carriers will be required to have a Schedule A. You might receive a Schedule C for those plans through general assets. However, per DOL instructions, these are not required to be reported on the Form 5500. What we do instead is make sure to mark the general assets box on the Form 5500 and also list the corresponding benefit codes. What are the due dates? Your Form 5500s are due 7 months after the end of the plan year. For your summary annual reports or your SAR, these are due 9 months after the end of the plan year. There is the 5558 extension, and as of January 2025, these can now be filed electronically through the EFAS system. They still can be mailed in as long as they're postmarked the day of or before the due date. And this will give you an additional 2.5 months to file, and that also extends the summary annual report as well. So some common reasons for late or missed filings. We have plan year confusion, maybe bundling confusion, so only one component of the benefits were filed, like your medical, and not realizing that all ERISA welfare benefits should be included. Or participant counts, so those dependents may be counted incorrectly, or COBRA recipients weren't counted properly. Some other thing to factor in with these 3 reasons is if there's an SPD wrap or no SPD wrap. If you do not have an SPD wrap in place, then your due date for each policy with 100 participants at the start will be based on the individual policy's plan year. Now, with your SPD wrap, because this consolidates all your ERISA policies into one plan, your plan year will be based on the SPD wrap's plan year. And that's regardless if the policies within the document don't have the same plan year. Another thing to assess with an SPD wrap is if there are 100 participants at the start, then all policies included in that document will need to be filed regardless of their if they have less than 100. So when you're counting your participants, you're counting all your participants cumulatively on your benefits, making sure not to count somebody more than once. So let's say John enrolled in medical, dental, and vision. He would be counted as one participant. We also have our 5500 determination tool on our website that can help you assess if you're exempt or not from filing. Some other common reasons for late or missed filings, maybe there was a compliance oversight. The employer might have assumed the broker or TPA was filing on their behalf. However, legally, that responsibility falls on that plan sponsor. Maybe there was a misunderstanding with the 401k, thinking that the 401k 5500 should include welfare benefit plans. But per DOL instructions, these need to be filed separately. They should never be combined. And then the last reason, maybe a short plan year, maybe due to a merger or acquisition, this was missed in transition, or a misconception that short plan years don't need to be filed. However, if they follow that participation count, they do. Now, the Delinquent Filer Voluntary Compliance Program, the DFVCP. All this is to encourage plan administrators to voluntarily file overdue 5500s. And this is with a significantly reduced civil penalty. And to be eligible, these are plans that are subject to ERISA rules only. You're eligible to pay if you filed prior to receiving a notification from the DOL. So if you receive a notice of intent to assess a penalty from the DOL, this does disqualify you from being able to participate. However, if you receive one from the IRS, a late filer letter, this does not disqualify you. One of the reasons for that is for welfare benefit plans in particular, only the DOL assesses penalties. How do we file under the DFVCP? First, you need to electronically complete your 5500. Excuse me. 5500s cannot be mailed in. They can only be filed electronically. Make sure to check the DFVCP box on the Form 5500. And then you can complete the online DFVCP penalty calculator to correctly assess the penalty amount. This isn't required to participate in the DFVCP. You can manually assess your own penalty, but using this calculator ensures that you're getting the correct penalty amount. And then after you complete that penalty calculator, they do give you the option to pay it electronically. But if you prefer, you can still mail these in by check. The penalties assessed by the DOL. If you do not participate, you can see in 2025 that penalty is $2,739 per day per plan. If you do participate, it is significantly reduced to $10 a day. And these are also capped. So if you have a small plan year that's under 100, so plans that are, potentially through a trust, these are capped at $1,500, again, per plan. Now, for plans that have 100 or more participants, those large plans, you're capped at $4,000 per plan. So one thing to think about when you're doing these is, again, factoring in that SPD wrap. So if you don't have an SPD wrap and you need to file a Form 5500 for your medical, that's potentially $4,000. And then you needed to file a 5500 for your life insurance, for instance, that's another potential $4,000 penalty. With that SPD wrap in place, since that consolidates all your plans into one, you are capped at potentially $4,000 alone. And another thing to factor in, penalties start accumulating the day after the original due date, not after the extension due date. So what are some best practices? Conducting annual benefits compliance audits, establishing a compliance calendar, confirming who's going to be responsible to file your 5500, making sure your HR and benefits staff is up to date on all the ERISA requirements, and then reaching out to experts. We're here to help you stay as compliant as possible. So that's that portion. Are there any questions so far on the 5500s?
Yeah, Melanie, thank you for that great overview for us on this important area. We don't have any questions in yet. I failed to mention at the beginning when I launched this that you're welcome to please submit in your questions through the Q&A section that's available there. And then also that we're not giving legal advice. We're just giving you an update of some information. So I just want to point out that, we're not giving legal advice here today. But Melanie, could you maybe take a minute? I know one of the things, so HR Service does offer this helping people with 5500s and with the early filing, whatever. Could you talk through a little bit about what that would look like if someone were to sign up and say, hey, I'd like to do this with you? What all do we do for them?
Sure. Yes, so we will complete your DFVCP filings. And then once we file those for you, we'll send personalized instructions on how to complete the DFVCP penalty calculator, as there are some questions involved. And we will also help you assess how many years you need to go back and file for.
Okay, so we kind of do all the legwork for them sounds like from A to Z that we take care of everything. We did have a couple questions come over now, so let me go ahead and give you the first one. This first one, I think you talked a little bit about, but let's just reiterate it for everyone. If we don't have 100 employees enrolled in benefits, are we still required to file Form 5500?
If you have less than 100 participants, then you use insurance carriers or have it through general assets, then you are exempt from filing a Form 5500. Now, if you use a trust, then you are required to if you have direct compensation of 5,000 or more. And that's regardless of participants.
Okay, and that's 100 participants at the beginning of the plan year.
At the start of the plan year, yes. Yeah.
Okay, you emphasize that's not including dependents, that's employees. Participating employees.
Correct.
Okay, thank you. Where we do ICRA, ICHRA fall in, where do ICRAs fall into 5500s? I know they are considered an HRA, but some of the information on the Form 5500 does not apply.
Oh, that's a good question. If they fall into the category of ERISA, then they need filed. If they don't, then they are exempt from filing. That's the clear rule of DOL. They have to be under ERISA.
Okay, great. Thank you. We will be providing copies of these slides and as well as a link to a recording of this too, so that'll be available. So great. Thank you, Melanie. We may have some other questions for you later on, but everyone feel free to kick in your questions. I'm going to turn it over now to Liz Warren. Liz.
Hi, thank you. So today we're going to talk about HR 1, better known as the One Big Beautiful Bill Act, and what it means to employers. We'll review payroll updates, benefit updates, and a few actionable items. Next slide, please. One of the most talked about items from the OBBBA is no taxes and on tips and overtime. So saying no taxes is not exact. The way it'll work is tips and overtime earnings will be tax deductible effective the 2025 filing year. The first 25,000 of tips is tax deductible, while the first 12,500 of FLSA mandated overtime is tax deductible. State required daily overtime payment is not eligible as that is outside of FLSA. The tax deductions are subject to income restrictions. So $150,000 for single individuals and $300,000 for married. They are still subject to Medicare and Social Security tax. Both must be reported on a W-2 by employers. And this is going to be retroactive to January 1st of 2025, and it expires end of 2028. So as it stands, it is not a permanent change. Another update is that the 1099 earnings reporting threshold increased from $600 to $2,000 per individual effective tax year 2026. Starting in 2027, the threshold will be adjusted annually for inflation, and this is expected to be permanent. We'll also see elevated fees for knowingly hiring unauthorized workers, which will be aided by increased funding for enhanced enforcement. Fees will vary based on the nature of the offense and may be civil or criminal in nature. This is also permanent. Next slide, please. So let's look at the updates that impact benefits. These are all expected to be permanent. The Dependent Care Flexible Spending Account limit has increased to $7,500 or $3,750 for married couples filing separately, effective 2026. Employer student loan repayment assistance up to $5,250 is not considered taxable income starting in 2027. The Trump Child Savings Accounts, to be implemented in July of 2026, will allow employer contributions of up to $2,500 and will not be subject to tax effective in 2027. Additionally, employees can contribute up to $5,000 annually pre-taxed. Telehealth services and direct primary care service arrangements are now compatible with HSA contribution plans. So telehealth inclusion is expected to be retroactive to plan years effective December 31st, 2024. Primary care arrangements no longer disqualify HSA participation effective January 1st of 2026. Additionally, the Family and Medical Leave Tax Credit for employers who provide paid FMLA leave to employees becomes permanent effective 2026. Next slide, please. There are a few actionable items. So first, work with your payroll providers to ensure your payroll systems are configured appropriately. Consult tax advisors and HR professionals for insights specific to your business. Update policies and communicate it with your employees. So it looks like we do have one question. Currently, can employers reimburse student loan expenses under educational assistance programs? That would depend. I would encourage consulting your tax advisor to verify. So good question. Will a new W-2 format be rolled out? We're also pending that information as well. It does look like that it is likely that it will roll out. It just hasn't been released yet. That's a good question as well. What additional questions do we have? Yes, this is recorded and will be sent out. Okay, well, thank y'all for your time. I'm going to turn it back over to Ken.
Okay, great. Thank you, Liz. Well, this was really kind of a quick, short meeting for you all here today. But if you do have additional questions and want to reach out to us, you can email us at solutions@hrserviceinc.com. You can also call us at 833-685-8400, extension 2. I did want to just briefly mention there's a number of things that we do for you all to help you be compliant and help you keep on top of all of these things. So if we could go to this, the next slide, please. There's a number of things that HR Service does to help through this process. So we offer a number of services. So we talked a lot about the 5500 and we referenced SPD wraps. So we actually have a service where you can either log in and complete the information and generate your own SPD wraps, premium only plan documents, all the notices. We have a whole package and a tool system there called our ERISA e-solution service. So I'm starting here in the middle under the benefit compliance, but this is a lot of what we talked about here today. So to really help you be compliant, we'd recommend that service. This is a do-it-yourself option where you or your broker partner can log in and do the services and things inside of there, or we have a white glove service where we can do it for you. So we'd recommend that you be compliant by having all of those things and then keeping your reports in. We can help you with your 5500 reporting or ACA reporting. So bear in mind, if you need some help, work with the experts so that we're help making sure you're compliant. We do offer some other things too. I'll just briefly mention here as we wrap things up. We do offer a number of HR solutions. So we can help you with human resource compliance or human resource best practices. So we have a tool, another web-based self-serve tool where we have all the training you need, compliance, handbooks online, forms, documents, legal library, total comp. We've added in a few other things like an opinion survey, a performance management system as well that's not listed on this slide. So all of those things are available under this ERISA e-solution service. So that's something, again, we'd recommend. A lot of folks find that they need more hands-on help than just, say, do-it-yourself tools. We do offer to where we call our fractional HR, where someone could actually come in, or we'll act as part of your HR team, or if some need an HR manager, we can act in that role on a very part-time basis and perform any hands-on HR solutions and help that you need. Even things like recruiting, designing a comp plan, doing training, performance management, anything that you may need. And then, of course, projects. If you just want somebody to just come in and say, update my handbook, or design a comp plan, or help with recruiting, or do this training, we can help with any of those kinds of things as well. We do offer some benefit administration solutions too, if you need any help with your FSAs, HRAs, HSAs, COBRA, any of those kinds of things. Well, with that, we will go ahead and wrap up today. Thank you so much for joining us, and please let us know how we can be of further assistance. Have a great morning. Bye-bye.